What is digital money, and why does it matter? Digital money is an electronic form of money that can be used for various purposes, such as buying goods and services, storing value, or transferring funds, without requiring cash or coins. However, digital money is also surrounded by many myths and misconceptions that often prevent people from understanding and using it. In this video, I will address some of the most common myths about digital money and explain why they are false or misleading. Let's start with the first myth. Myth number 1. Digital money is not real money. This myth, based on narrow and outdated criteria, denies digital money's value, legality, and form. This is one of the most basic and widespread myths about digital money. Some people think that digital money is just a bunch of numbers on a computer screen, and that it has no value or backing. But this is not true. Digital money is a type of electronic money that represents fiat currencies, such as dollars or euros, which are issued and backed by governments or central banks and widely accepted as a means of payment. You can also withdraw this type of digital money as physical cash from an ATM. Another type of digital money is the crypto assets, which are new currencies based on cryptography and blockchain technology and created and managed by decentralized networks, such as cryptocurrencies. So, digital money is real money, just with different characteristics and advantages. Myth number 2. Digital money is not secure. This is not entirely true, as digital money can have various security features and safeguards to prevent these incidents. Digital money is safe and secure in digital wallets, which are like personal bank accounts with exclusive access, if you follow basic precautions. You can secure your digital wallet with a password, a PIN, or a biometric feature, like your fingerprint or face. You can also back up your digital wallet in a safe place, like a USB drive or a paper wallet, in case you lose your device or forget your password. Digital money is only as safe as you make it. Users, providers, and regulators of digital money need to work together to ensure the security and trustworthiness of digital money. Myth number 3. Digital money is illegal. Many people falsely believe that digital money is outside the law and the rules, and that it is used for illegal activity. But this is also not true. Digital money is legal and regulated in many countries around the world, and more governments are recognizing and embracing its potential. This means that digital money is subject to the laws and rules of the countries where it is used or issued, and that governments are trying to support its development and innovation. Like any other form of money, digital money is a tool that can be used for good or bad purposes by the user, and it is regulated by the same laws and regulations, such as taxes, anti-money laundering, and consumer protection. Myth number 4. Digital money will replace cash. This myth assumes that digital money is superior or incompatible with cash or bank accounts, and that it will cause major changes or challenges to the existing financial system. But this is also not true. In reality, both digital money and cash or bank accounts and digital money in the traditional financial system can work together, support each other, improve each other, and combine with each other. Digital money is a complementary form of money that has some advantages over cash or bank accounts, such as lower fees, faster transactions, global accessibility, and more privacy. But cash or bank accounts also offer some benefits that digital money does not, such as physical convenience, legal recognition, and more stability. Digital money is not a threat to the traditional financial system, but an innovation that can improve it. Myth number 5. Digital money is not accountable. This myth is based on a misunderstanding or a misrepresentation of how digital money works and what features it offers. But this is also not true. Digital money is transparent and accountable, as every transaction is verified on a public ledger that anyone can audit, and every user has a unique identifier that can be linked to their transactions. Digital money is traceable, as every transaction creates a trail of information that can reveal patterns, trends, and connections among users, transactions, and entities. However, this does not mean that digital money is without privacy or security risks. Users should be aware of the trade-offs and challenges of using digital money and take measures to protect their data and fund. Myth number 6. Digital money is widely rejected. This myth is based on a lack of awareness or exposure to digital money and how it is growing in popularity and adoption. But this is also not true. Digital money is widely accepted and used, and its popularity and adoption grew rapidly to 1.2 billion registered accounts in 2020, a 12% increase from 2019, according to a report by the World Bank. Millions of merchants and businesses worldwide, including Amazon and PayPal, accept digital money as payment, while millions of users and investors use it for various purposes such as storing value, exchanging goods, or earning income. Digital money is not a niche or fad, but a lasting and evolving innovation that has many benefits and potential for the future. That is changing the way we think about and use money. Myth number 7. Digital money is only for technologically proficient. This myth is based on a misconception or a stereotype of digital money and how it is accessible and affordable for everyone. But this is also not true. Digital money is a simple and affordable way of payment that anyone with a smartphone, a computer, and an internet connection can use, regardless of where they live. It is also easy to use, as there are many apps and platforms that make it user-friendly and convenient. These apps and platforms allow users to send and receive digital money, buy goods and services, and access other financial services, such as savings, credit, and insurance, with just a few clicks or taps. Digital money is not only for the rich or tech-savvy, but for everyone who can benefit from its financial inclusion and empowerment. Myth number 8. Digital money is damaging to the environment. This myth is based on a confusion or a generalization of digital money and how it differs from cryptocurrency. But this is also not true. Cryptocurrency is a type of digital money secured by cryptography and decentralized networks, which consumes a lot of energy and resources for validating transactions and creating new coins. However, cryptocurrency is not the same as digital money. Unlike cryptocurrency, digital money uses less energy and resources, and it is more efficient and less wasteful than the traditional financial system that relies on paper, metal, plastic, and transportation, which have a high environmental impact. In contrast to the conventional financial system that relies on fossil fuels, coal, and nuclear power and has a high carbon footprint, digital money is greener and more sustainable as it can lower the ecological cost of money. In summary, these myths are often based on misunderstandings or outdated assumptions, and they can hinder the adoption and development of digital money. By debunking these myths, we can better understand and appreciate the potential and reality of digital money and how it can coexist and complement with other forms of money and the traditional financial system. Thank you for watching. I hope you found this video helpful and interesting. Also, let me know in the comments below. I'll see you in the next video.